someone else, buys 100 shares, someone else sells 100 shares. So again, volume goes up to sell 50 shares. But open interest is something different. How do we interpret this data with respect to price? And let me show you ICICI Bank future contract. Tell me, when the prices have gone down and open interest is increasing, what does this mean? ICICI being a portfolio based stock, many people will have the stock in their portfolio. If you are a trader, you may choose to book profits.
Hello everyone and welcome back to the channel. This is Nimisha and we have Zubin with us. Zubin, in the previous video you mentioned about open interest. So what actually this concept is and how does this help us or impact in our trading or investing journey?
Okay.
And before you tell us that, to all the viewers, do like and share this video and subscribe to our channel so you do not miss out on any updates that we put in there.
Okay, great. So, Nimisha, what open interest is, that I'll definitely tell you. But again, the more importantly, how can you use this data in your trading? All right. So, I'll help you explain open interest as a concept by giving some real examples. All right. But before we get into examples and let's understand what is OI. That's a short form. Today the world is of AI.
Yeah.
Right. Now this is OI, which is called as open interest. Now open interest is something like volume. All right, but it is a different from volume. What is the definition of OI? Open interest. Open interest is nothing but the number of contracts open in the market.
Okay.
All right, any particular contract. Let's say, for example, you are taking Nifty January futures. So this is one contract. How many contracts are open? So that is what we need to understand. All right. Now, first, before I explain you OI, you will understand volume very easily. Volume is number of contracts traded. If one particular person, buys 100 shares and the one sells 100 shares, the volume is equal to 100. Okay, then during the day, someone else, buys 100 shares, someone else sells 100 shares. So again, volume goes up to 200. Sell 50 shares, buy 50 shares, volume goes up to 250. So every time, there is a trade between any person in the market, the number of shares that are, being traded, so that volume will keep on increasing, and that will be the total volume that will be depicted towards the end of the on the bottom of the chart, right? But open interest is something different. All right. Now open interest of let's say this particular contract over here. All right. There is Mr. A and there is Mr. B. Let's say Mr. A bought 100 shares of a particular contract, all right, and Mr. B sold those 100 contracts. Okay. So what will be the OI in this case? OI will be plus 100. Okay. So 100 contracts bought and 100 contracts sold. So OI is, so now B is the seller. He has written the contract and gave it to A. All right. So open interest. So there are new contract of 100 contracts that are opened up on this particular expiry, Nifty Jan future in our example. That's an example. Now during the day or maybe next day or whatever, Mr. X comes up and Mr. X says that okay, he buys 50 contracts. Okay. All right. At whatever price. All right. And Mr. A says the next day that I want to give away my 50 contracts. He has 100 contracts with him. So he gives away 50 contracts to Mr. X. Yeah. All right. So in this case, what will happen is there is no new contracts that are opened. The contracts which are already opened, they just changed hands. That's it. So in this case, the open interest will not go to 150. It will remain 100 only. Yeah, because but there if are it no was new contracts. Yes, but if it was volume, then the volume would have gone to 150. 150, correct. Did you understand? Yeah. All right. Now there is Mr. X. All right. He again buys 50 contracts. All right. And this time Mr. Y. Okay. He may be bearish. So he sells 50 contracts to X. Now in this case, what has happened? Mr. Y has created a new contract and sold it to X. So in this case, another 50 contracts will be opened up. So OI will now be 100 and 150. So now the total OI will be 150 contracts. Did you understand?
Yes.
Okay. Now let's say after a while, Mr. X says that okay, I have made some profit or whatever it is. He sells 100 contracts. All right. And Mr. B, since he has sold earlier, Mr. B buys those 100 contracts. So what will happen is that these 100 contracts which were opened up are getting closed. So what will happen to OI is there will be minus 100 contracts and there will be 50 contracts that will be left in the market. Okay, so there is an reduction in OI in this case. Did you understand?
Yeah.
All right, and finally, in expiry, when this Nifty 30th January, this particular contract will open, and let's say all the contracts which are open, which contracts are open? Mr. A has still 50 contracts, all right, and Mr. Y has 50 contracts. So Mr. Y will have to buy, or the market will square it off, and Mr. A
Has to
has to sell 50, and minus 50, the open interest will be
Zero.
zero on expiry. All right. I hope you understood what is OI, number of contracts open in the market. Now, how do we interpret, and the market direction, or how do we interpret this data with respect to price is something that we'll see now. Okay. OI and price relationship. Yeah, the underlying asset price of whose OI we are looking at. Open interest and price. What will be the interpretation of what will we interpret by looking at this data is what we'll have to understand that.
Okay.
So there are four possibilities. All right. Possibility number one is that open interest is increasing, and along with that, the price is also increasing. So prices are increasing of the particular asset, and the open interest is also increasing, meaning more number of contracts
are taking place.
are opening up, and when the prices are going up, it means that it is bullish. So there is a term called as long build up. There is long build up happening in the market. Long build up is what do you mean by long? We have seen it in long position and short position. So long position mean when the prices are going up, there are many people who are
bullish
towards that particular futures. So or that particular asset class. So they are buying it at a lesser price, expecting that prices will go up, and then after that they will sell it. That is one. When open interest and price both are increasing, it is considered to be bullish, long build up. That is what the terminology says. The second thing is opposite. When the open interest is going up and the price is decreasing, many people are trying to short the market. So they are opening up short contracts.
Okay.
More and more short contracts. So this we will call it as short
Build up.
Clear? Yeah, these two fairly simple. Now the third possibility, that OI is decreasing and price is increasing. Now listen, see, when there is a short build up, the security prices have already gone down. All right. So those who have created short positions on the top, they will square off. When they square off, meaning they are buying, no, they have sold first and now they are buying it. So when there are more and more people who are buying, prices will come up a little bit. So that's exactly what is happening. When the prices are coming up, and whatever short positions, the contracts which were short built up over here, now at the bottom, that short is getting covered, meaning squared off. So when open interest is going down, all right. So in this particular example, we saw that when the contracts are getting covered, whatever they have created, yeah, they are getting covered. So what is happening? Open interest is reducing. All right. So in this case over here, when open interest is reducing and the prices is increasing, it means that there is short covering in the market. So this is kind of a bullish. When prices are going up, it is considered to be bullish, but very mildly bullish.
Okay.
Long build up is considered to be strongly bullish. The long positions are getting built up. So the expectation is that the prices may go higher from there on. But over here, the prices have already gone down, and from there is a small bounce back.
Correct.
All right, because of short covering. All right, and the fourth possibility over here, the fourth possibility is that open interest is going down and the price is also going down. So now what will happen is when there is a long build up happening, so prices have gone up, open interest has also gone up. Now there are people who have bought at a lower price and they are making profits. So they want to square it off. So
Correct.
whatever long that they have built, they have started selling. And because of their selling, prices are coming down. And along with that, the open interest which was built up over here is now
Coming down.
covering. So that is called as long
covering.
covering. Nahi, this is called as long unwinding.
Unwinding. Okay.
All right, this is the market lingo. So the open interest analysis is something like this. So always, whenever there is a long build up in any particular stock, after a long build up, there will be long unwinding. After the long has unwinded, then probably again there could be a long build up or maybe a short build up.
Yes.
If it is a short build up, after short build up, there will be short covering. Okay.
Yeah.
So, how can traders and investors, where can they look at this particular data? So, basically, I look at web.strike.money, our platform.
Yes.
It's a fantastic platform, which Strike platform, there is open interest. And on this particular Nifty, you can see this data on the graphical manner. But this is about options open interest. But
Correct.
because we have just started, let me show you ICICI Bank. All right, and let me show you ICICI Bank future contract.
Okay.
To help you understand open interest over here. So we will go to futures segment over here in ICICI Bank, and you can see the 1 month future, that is the January month contract. All right, there is a OI indicator that is placed here. The red line is the OI indicator. Now, see what is happening right now from this point of time. The prices have gone down, and what has happened to the open interest?
It has gone
Has
up.
gone up. So tell me, all right, and viewers also can type it in the chat box and in the comment section, and tell me, when the prices have gone down and open interest is increasing, what does this mean?
Short covering.
Prices are going down, open interest is increasing.
Short build up.
Yes, prices are going down over here and OI is increasing. That is short built
build
up.
up.
So there is a short built up in ICICI
ICICI.
Bank, meaning there are many people who have created short positions over here. Now what can happen? The prices are already down from 1340 to 1200. So what can happen if the market turns? There may be a bounce back. And when there is a bounce back, all those people who have created shorts at around 1300, at around 1200, 1220, they will square it off.
Yes.
So what will happen? The open interest data will again start falling down. And when that happens, it will be short covering. If you don't remember, that's okay. On the left hand side over here, we have it in tabular format. So date wise, so 22nd of January, what has happened? The prices have gone up by 0.14%.
Yes.
And the OI has also gone up by 0.24%. Not much, but still when the price and OI has gone up, it means there is a long build up. All right. Yesterday, what happened? That price fell by 3% around with an increase in open interest, and that is nothing but short built up. So this big red candle over here, the OI has shot up. So again, there is some short build up that has happened yesterday over here. So when you read this particular data and you have this particular stock, at least it will be helpful for you to hedge this. ICICI being a a portfolio based stock. Many people will have the stock in their portfolio. And imagine somewhere around this level over here, 18th of December, when the prices are already up. All right, significantly prices have gone up. And somewhere around 18th, yeah, look at this, around 18th, there is some short built up. So 17, 18, 19, 20, when you see that there is short building up over here for 4 days, at least, investors can, what they can do is, if they have the stock in their portfolio, if you are a trader, you may choose to book profits.
Yes.
If you don't want to book profits, at least you can write a call of ICICI Bank. All right, or you can short futures of ICICI Bank to hedge your portfolio.
Yes.
And if you do that for short term, see, have a look at it, how nicely, beautifully from 1300 prices have fallen down to 1200. So you could have the investor over here could have pocketed extra 100 rupees. Now in future, yes, ICICI Bank doing well, maybe in next 1 year, 2 years, the prices of bank may again go up. Okay, the portfolio may rise, but this short term movement will help the investors to maximize their returns. Are you there?
Yeah.
So along with that, now on the homepage itself, on a particular day, if you are a trader, maximize that chart, and you can see that out of all the futures stock, there are 38 stocks in which there is long build-up that has happened today. In Dalmia Bharat, the OI changes by 22%. That is high. All right. In MCX, the OI changes 7.70%. So in all these stocks, the long has built up. In all these stocks, 153 stocks, the short has built up. In these stocks, there is short covering, and in these 26 stocks, there is long unwinding that has happened. So if you want to have a look at it, if you are a bullish person, all right, you want to find out stocks to buy for maybe for even short term, all right, then this particular long build up is something that you can watch out for. And in this long build up, let's say in Dalmia Bharat, so later you need to check the chart of Dalmia Bharat. You can check the futures activity as well of Dalmia Bharat. And in with a glimpse over here, you can see that okay, the prices had gone up, and now since last few days there is some green candles happening. The open interest has gone up, so there is a lot of long that is being built up.
Yes.
Now, next, all you have to do is you have to put maybe you can go to the technical aspect, charts aspect of it, where you can put up your momentum indicator. If the momentum indicator is good, prices are taking resistance at the moving averages.
Correct.
So if the resistance is broken on the upside, all right, then maybe the trader can look to buy this particular stock for a target of its previous top over here.
Correct.
So this way, stock selection also becomes very easy. Okay. And if the overall market scenario is bearish on that particular day, you look for stocks which are short built up. All right. In the homepage itself, you look for all the stocks where there is short built up that has happened. So let's say ICICI Pruli, India Mart, Policy Bazaar. So let's have a look at Policy Bazaar. I feel Policy Bazaar is, many people, they love the stock. So PB Fintech is its code. We can look at the futures chart first. All right. In the futures section, see, the prices are, under pressure. It's under selling pressure, and OI is increasing. A lot of selling pressure. So at least those who have bought this stock in, during IPO and they've got allotment, when you see such things that is happening right from here, when prices started falling down, this was the place, where the short is built up. So maybe after a short build up, there might be one bounce back where there will be unwinding. All right, so you can be careful with this. So right now the data is not so much over here to predict, but yeah, this is a stock to stay away from.
Yeah.
Not to buy this particular stock as of now. Right?
Yeah.
So that is about open interest. All right. And for futures open interest, we also have, there is something in options. In options as well, there is a lot of, you can see open interest. So what is all these things in options? We will cover in our next video.
Thank you so much.
Great.
And viewers, I think you would have also loved the video, because I was very much amazed by looking at open interest and how easily, it will take some time, but how easily it, helps you with all your data and analytics. You can go to our website, that is web.strike.money, and you can find everything that Zubin has mentioned in the video. Go and sign up there, because we have a 7-day free trial period. Before that, like and share this video and subscribe to our channel.